So the Bitcoin halving is just part of this same cycle. That cycle is the liquidity cycle, which is the big macroeconomic cycle. And so this Bitcoin ETF is coming exactly as you suggest at the right point for all of these things. And if it plays out like it has done in the past, and there's no guarantees of that,
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discuss about Bitcoin and crypto according to Raoul Pal, looking at the price performance of cryptocurrencies last year and their typical annualized price performance over time. We can see that they have huge cycles. As you're aware, the Bitcoin economy increases by around 100% annually. Therefore, under such scenario, a large amount of money will be entering crypto land from the fat world, another way of looking that's fantastic. So during this cycle, it's probably going to draw a lot of assets, and many assets will disappear when the returns unexpectedly decline. Thus, we'll see that the other one way to look at it is that we are all seed investors in the Bitcoin IPO investors or Series A, B, and C investors, and you are likely familiar with many of us, since we are soon to take the big stage, are somewhat accustomed to the fact that, in general, IPOs haven't done well in recent years. Nice. But there hasn't been much investment in this field yet. It's still early in the cycle, and lots of things Raoul Pal discuss, so please watch the video to end, and share this video, and subscribe our channel Everyday Finance. Thanks.
So look, I think it'll happen even by the time that this is edited now. It probably will have happened. So here's the mental framework I have for this. I've got two frameworks of how I think about it. Firstly, we've been building this new digital world, this parallel kind of financial system. Let's call it crypto land. And then we've got fiat world, which is the existing world that we live in. And most of the world's liquidity and money exists in fiat land because it's much bigger than crypto land. Now, what this ETF is basically a trade deal between these two countries. So people in fiat world can now go and invest in this new country easily. And so what it's then is a factor of, like with all trade deals, is will my return on capital be higher by investing in this emerging market versus in my domestic economy? Now, if we look at last year's price performance, and typical annualized price performance of crypto over time, taking into account it has huge cycles, the Bitcoin economy grows at kind of 100% a year. So in which case, there'll be a lot of money coming from fiat world into crypto land. Another way of thinking about this is, okay, that's great. So it's likely to attract a lot of assets over this cycle. And a lot of assets will wash out when suddenly the returns aren't as good anymore. So we will see that. The other way you can think about it is we are IPOing Bitcoin, and we've all been seed investors or Series A, Series B, Series C investors, and we're now about to go to the big stage. And, many of us are kind of used to recent years where, generally speaking, IPOs haven't done great. But this is early cycle. There's not much investment in this space yet from fiat world. So the chances are we're going to attract a lot of assets. So short term, don't really know. It's not really my area of interest.
Yeah.
What my area of interest is could this attract 10 billion, 50 billion over time of new capital into this emerging market of crypto land? And the probability is pretty high because, a lot of people are looking for higher return opportunities. You can see it by the amount of activity that goes on platforms like eToro, in things like Tesla and other technology stocks, right? People are searching out the risk curve because a lot of people are 401k investors in the US. So they invest in their pension, but then they also like to have other assets that maybe have a different risk reward profile. So over time, I think it's very, very positive. It just opens up to more people. Those of us who've been in crypto a long time know how difficult and painful it is to open a wallet, execute your own trades, do all this thing, think about self-custody. Now, platforms like eToro have really helped people onboard and get comfortable with this, but this makes it even easier.
According to Raoul Pal, there is this enormous circle that continues, and typically this time frame is referred to as macro springtime, turning into a macro summer, which is also known as crypto spring and summer, are all influenced by the same macro causes, namely world growth in certain nations such as Europe or China. The rate of inflation is extremely sluggish, dropping, and since elections are coming up, there are more chances. Interest rates and stimulus will probably be lowered, releasing liquidity, and markets lose liquidity. Therefore, the Bitcoin halving is basically a component of the same cycle is the liquidity cycle, which is the major macroeconomic cycle. Thus, precisely as you indicate, this Bitcoin ETF is arriving at EXA when it's appropriate for all of these things, and if everything goes as it has in the past, let's back to Raoul Pal interview.
Yes, so there is a macro cycle, something I call the everything code, that started back in 2008 when every single major government reset interest rates to zero. It was kind of like a debt jubilee. Like, you don't need to pay the interest, guys. We know there's too much debt in this world. Every government reset all of the debts to this 3 to 5 year period. And what's created is this perfect 4-year cyclicality. Now, Bitcoin was born at the beginning of that. And it follows exactly the same 4-year cycle, which happens to be exactly the same as the presidential cycle. So there's this kind of massive cycle that goes on, and usually this period is what we call macro spring transitioning to macro summer, and that's crypto spring, crypto summer. They're all driven by the same macro factors, which is global growth is slow. In some countries like Europe or China, it's really slow. Inflation is falling. And then we're going to an election. So the chances are is more stimulus. And interest rates are likely to be cut. That unleashes liquidity, and liquidity sloshes through markets. So the Bitcoin halving is just part of this same cycle. That cycle is the liquidity cycle, which is the big macro economic cycle. And so this Bitcoin ETF is coming exactly as you suggest at the right point for all of these things. And if it plays out like it has done in the past, and there's no guarantees of that, then generally speaking, you will start to attract a lot of new capital into the space. That's always been the case. So currently in crypto, there's 516 million wallets, but they grow at about 100% a year. So if that's right, we'll grow by another 500 million wallets somewhere between 2024 and 2025. And that's a lot of new capital. So I think that it's a very big deal. It's come at exactly the right time. And then the market will start focusing on the ETH ETF.
Yeah.
Which, by all accounts, seems like there's a reasonable probability that's going to come. And so you'll find that the liquidity comes into Bitcoin. It'll flow towards ETH, flow towards other assets, and that liquidity spreads out. And you get what's known as alt season, which is where it starts off in crypto spring, where Bitcoin is the outperformer. It's like the safe assets, like beginning of macro spring, treasuries outperform.
Yeah.
And then what happens is people get more confident, they make a bit of money, and it starts moving out the risk curve. And people in traditional markets will go from treasuries to corporate credit to junk bonds to emerging market junk to private sector lending at the end of it, and then they all get caught out when the cycle turns. The same is in crypto. Altcoin season is the risk-taking season, and we're coming into that. That usually coincides around that halving point. And so that's when it becomes silly season in crypto and people start to lose their heads. No, I don't see that, but there's always a probability, right?
Yeah.
But the thing that people forget, it's a volatile asset class.
Yeah. Yeah.
And in every bull market, you will have 35% pullbacks as normal. And that's a lot for any normal traditional market. And that catches a lot of people off guard, which is why you need to think about how you size your positions and your time horizon. But we will have that. We'll have a whole period of 3 months where it goes sideways. It falls 35%, trades sideways. Everyone gets bored. Nobody understands it. Maybe the Nasdaq's ripping higher. Everyone's getting really angry, and then liquidity seeps back in, and before you know it, it's off to the races. So you've got to prepare yourself for the unexpected. You've got to prepare yourself for volatility. There is no such thing as free money. And even though the probability is that the macro cycle is in your favor, you've always got to keep your eye on the risk that you're taking. So how I think about this is I've coined it the everything, everywhere, all at once cycle. So most of the key technologies have been in place for a while now.
Yeah.
In terms of the applications layer, but it's the adoption of the applications layer, the adoption of NFTs by giant corporate brands, the adoption of blockchain rails for a whole bunch of different things, from traditional finance of putting, equities or derivatives or whatever on chain. I think that is coming. I think we're going to see, with stuff like Solana being able to create 1 million NFTs for $100, well, that means ticketing or any high frequency contractual stuff can happen. We're seeing Visa build on top of that. We're seeing massive speed increases again in Solana, where we've got Fire Dancer that has 1 million TPS. So that means high frequency trading can happen. So, new centralized exchanges and the rails for the finance system, okay, that can go on chain. We're seeing large corporate brands building using NFTs and other Web3 technologies. We're seeing the adoption via RAAs and the ETFs and other things. So we're seeing a lot in the space. And I think that continues. I think the other thing we all see is gaming. We've all been waiting for the gaming to meet Web3, and we're seeing quite a lot of evidence that is on its way. We've got blockchain meets AI for authentication of who we are. We're about to go into an election in the US. And in fact, we're going through like 60 elections around the world. We've never gone through an election with AI. And the deep fakes driven by AI will mean you can't trust anything you see in the wild. Yes, you're on the eToro platform watching something. Well, it's authenticated by eToro. You go outside, you don't know whether an interview you're watching of you and me is actually the real interview. So I could be saying crazy things and everyone thinks, well, this was a real interview, right? This is a huge problem. How do we authenticate who humans are? How do we authenticate content? And I think blockchain is part of that. So I see the opportunity for that as well. In terms of NFTs themselves, we're going to see a lot more use cases come. It's not just about your monkey JPEGs. But NFTs at the high quality asset side, we're talking about Beeple or Xcopy and these kind of famous artists that are very expensive. This thing trades exactly like assets do in fiat world. So in fiat world right now, the economy's slow, and the assets that require disposable income, trophy assets, lag because nobody's got any money yet. And so if you look at the price of Rolexes, you look at the price of wine, you look at the price of used cars, look at the price of art, it's all been going down because nobody's got any real money yet. Yes, the stock market's gone to new highs, but most people haven't participated. Everyone's businesses are still a bit slower than they want them to be, etc. It's exactly the same with ETFs, with NFTs. NFTs lag the price because really they start taking off when the price goes back to all-time highs. And people are like, oh, look, I've got money. I want to go and buy a crypto punk. Because I've got one in the background, because it's a social signaling status. It's a luxury good in crypto land, much like a Rolex watch is a luxury good in fiat world. So I just think it's lagged, and I think prices have started stabilizing a lot of the NFT market. A lot of it will go to zero, but out of the ashes, we will find diamonds in that dust. And I think, there's a lot, that it's only gone through one cycle ever. So we need to figure it out. But I'm very bullish NFTs, the right ones.
According to Raoul Pal, people seem to forget that it's a volatile asset class and that 35% pullbacks are typical in every bull market. Many customers are taken aback by that at a typical traditional market. Therefore, you should consider how you measure your places and time horizon. But we'll have that, and a whole duration of 3 months of sideways movement indicates a fall. 35% of transactions go sideways, boring everyone and leaving no one in the know. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance. And we will meet in next video. Thanks.